The Senate hearing on JPMorgan Chase's multi-billion-dollar trading loss reveals that the bank teetered right on the edge of those quote-unquote acceptable practices. But the question is whether or not it really stepped over the line and whether or not the banking industry really learned their lessons from back in '08. Now, although the criminal case appears unlikely, the report does show that JPMorgan employees may have played fast and loose with the new rules that were supposed to stop this. The report, released last week by the Senate's Permanent Subcommittee on Investigations, shows how JPMorgan's traders changed how they valued securities to keep the losses from growing too big, essentially masking the problem. The hearing late last week, it turned contentious at times, and for a period in 2011, regulators stopped receiving reports about the investment bank because Jamie Dimon, the CEO, ordered the information halted because of security concerns. In response to that revelation, Senator John McCain said, quote, "Do we live in a world where we just decide because we're concerned about something, we're not going to comply with the regulations?" And it got even more heated after that. And Richard, I ask you about this because everybody was under the impression that with the new regulations after '08 and the come to Jesus moment and that we were going to have more transparency, the leveraging wasn't going to be 30-1 of the craziness, we were going to have reserves. This came out and everyone said, geez, JP Morgan's the gold standard here. They're doing this. What the hell is going on?
How about a little stop and frisk for these guys? What do you think? Have Bloomberg send the cops up, put them up against the wall.
You've looked into this before.
I have looked into it before, and there's a culture there that enables them, with the good lawyers they can hire, to teeter on the edge. And sometimes they go over, sometimes they don't. And the real victims of these crimes, in the end, are those of us who pay interest rates for mortgages and housing and deal with banks. These seem to be victimless crimes. They are not. They've affected the entire United States economy, and it would be nice if Mary Jo White, when she's confirmed, well, she'll be at the SEC, if the banking regulators took a note from Sheila Bair, the former head of FDIC, and really started smacking some people around.
But here's what I don't get. And part of what was scary was, again, JP Morgan is supposed to be one of the good guys here, okay? And if they're doing it, who knows what's going on? Is it that the regulators don't have the stick, that they don't have the staff, or that they're, you know, they're lightweights compared to the guys?
Culture, the political culture and the operating culture of both the banks and the government are that regulation's undesirable. You're sitting on people. You're stopping entrepreneurship. I mean, this has cost the people of the world trillions of dollars, not just in the wealthiest of the wealthy, in the way the economies function. Look what's happening in Cyprus this week. This has to stop, and it can only be stopped by government, and only a government willing to take on the big boys, the rich and the powerful, will be able to do that.
And of course, the reaction that everybody had in 2008, you know, there were people who wanted to, grab an axe and take it to Wall Street. There were people who were that upset. But how many times did we hear in the 4+ years since, job-killing regulations? It's the way it's constantly been described, job-killing regulations.
Hey, listen, Jim Himes, the Democratic congressman from Connecticut, who's one of our favorites, right? He's got a piece of legislation right now to try to get rid of the regulation on derivatives that got put in post the crash. A lot of guys say that there's been chilling chokeholds put on how trading happens, but I'm only saying, when I watched the hearings on this, you did a double take. I mean, I saw Senator Levin going into it, and when I saw Dimon, who's as smart a guy as there is, said, yeah, it's got completely out ahead of us here. What is going on?
There's been a confusion between financial manipulation, bankers, and entrepreneurs and people who create jobs. What the Republican right, CPAC and all, did is pretend that by allowing the great Wall Street casino, which is just gambling, to go on as though it created economic activity, they in effect were hurting those same people who actually go out, build companies, and create jobs. That political connection has to be broken, and only Obama, whose competence is well known in this area, can do that.
That was for you, Mark.
First of all, this was a corporation, the bankers, and they lost their own money. They didn't lose your money. And the worst thing that ever happened in the banking business was to allow the banks to trade for their own account. And they did that years and years ago, and nobody ever cured that.
Well,
so you can't quite
blame a Democrat for that. That was Bill Clinton.
Yeah.
And that was the end of Glass-Steagall.
I think it was even before Bill Clinton.
Maybe it was Richard Nixon. Can we take it back?
No, it wasn't Nixon. It was later. It was later.
I think that was Glass-Steagall.
It was later. So yes, there's a problem. Stop them from trading, and that would simply stop it.
So you're pro-regulation?
I'm anti-regulation. I'm saying stop that.
for banning.
Don't even regulate them.
You outflanked me
Just
on my
throw
left
it
there.
out. Let them be
See that
bankers.
coming.
Well, we come back here, a couple political stories. You won't believe who's back in the headlines here, potentially getting ready to run again. We'll ask Dominic if Mr. Weiner could have a second act in politics. And also, interesting story with one of Richard's old colleagues getting busted here, not driving under the influence of drink here, but driving with weed. Is there a potential in our lifetime we'll see the legalization of it coast to coast? Stay with us. We'll be right back.